Hello and welcome to Money Control. You've tuned into IPO Watch and you're currently watching IPO Wrap. It's been a blockbuster week for IPO. And it's not just it's raining IPOs, right? Next week you have bunch of names, almost 8 mainboard companies, which are set to raise in 4,600 crore from the primary markets. 4 SME companies tapping around primary markets to raise 135 crore. But without any delay, let's delve into the companies hitting the primary markets. Muthoot, Microfin, that's the first. Motison Jewelers is the second one. And the third one is Suraj Estate Developers, Happy Forgings, and another one, RBZ Jewelers, Crore Brands Marketing are some of the other names out there. The standout amongst them is, of course, Happy Forgings, which the issue size is to an extent of 1,000 odd crore. But without any further discussion, actually, let's take the discussion forward with our guest, Prashanth Tapse, who is a research analyst at Mehta Equities. Well, evening there, gentlemen.
Thank you.
All right, let's start off with what are you looking at from the 8 mainboard companies that I've mentioned, which is the IPO that you like the most and why?
I think DOMS is the best IPO which I was looking at last week. Because of the segment which they are catering to, that is children's and little bit adult boys. So this segment is growing very fast, even though pencils and stationeries are in a very smaller segment in the whole world. But I think these are the businesses. Without this, there is no school, there is no drawings, there are no sketches. Even in the digital world, these companies doing great, and they have come up very fastly in last 5 years. If you see Natraj pencils, the Hindustan pencils and all, they were leading the markets last 20 years. But suddenly DOMS is into picture. They are coming up with the unique colors, unique products. I think they are beating all the Natraj pencil models and all. So they are using this advanced technologies to bring these kind of pencils in the market, and the other accessories of school industries like books, the rubbers, the sketchers and all. I think DOMS was the best IPO which I was looking at last week. And Inox is the second IPO which I was liking very much because of their industries they are serving to. Valuations are very reasonable. There are no competitors. Globally, 5 companies. India, only 1 company listed again. So I think second was the company called as Inox Limited. These 2 IPOs were very much in action in my
week. Just hang on that note, Prashanth. I'm just going to key in few more dynamics to that. Further navigate our conversation to the next issue. DOMS Industries, of course, has been subscribed by 91.4 times so far. Inox India is scheduled to be listed, of course, December 21st, almost commanding a grey market premium of 60%. And of course, India Shelter Finance. Prashant, now that you've touched upon this week's IPO, let's talk about of the 3. Sure, we've seen demand for DOMS. Sure, we've seen demand coming in for Inox India, which has also got subscribed fully on day 1 before the closing, which could take place on Monday. What do you think about India Shelter FinCorp?
I think India Shelter would be something dark horse everybody is missing. This sector is really unfocused and untouched by large corporate financing companies. This is basically into financing of housing sector, but in tier 2, tier 3 cities, that too a women focus. They are keeping women as a first applicant, wherein they are very much in terms of their comfort levels. So I think India Shelter is doing great in terms of their tier 2, tier 3 growth in housing finance, and this would be a dark horse in competition with Inox and DOMS. So I think for long-term investors, India Shelter should be the best pick.
So I guess you were making a point before we started this live discussion that you think India Shelter is going to be the next IRDA, where people were perhaps looking at Tata Technologies, but it's actually most of the premium and the gains that have come through the listing. You think anything of that sort is going to happen even in India Shelter?
Post listing again, the DOMS and Inox will see something like that listing gain candidates only. But short term to long term, I think the India Shelter will do better. Not as good as IRDA, but yes, better than these 2 other companies.
All right. Okay. So let's also talk about this new week, the next week that has come on. We will have like 8 listings, almost 8 companies, beg your pardon, which will be coming up for bidding in this week, where you will have something like a Muthoot and Motison, Suraj Estate, Happy Forging. Of the 4, what do you like and why?
Muthoot Finance would be the best pick right now for me because the industry is again underserved by a lot of big corporates. And the way they are doing is great. They are yielding, their yield is high, better than the other listed companies. Again, their sectors, their states which they are focusing again is less focused by other microfinance companies. And they are doing great in terms of their business model, keeping again a group business of 15 women, and they are serving their short-term needs for their businesses. It's a small business catering and all. So I think Muthoot, because of their valuations, again, it looks very good. Industry PBs or price to book value is around three times, and they are coming out around less than 2 times the price to book value forward earnings. So I think Muthoot Finance will be the best in terms of next week IPO.
Okay. So a subscribe rating goes to Muthoot Microfinance. How about Suraj Estate Developers? Now, I spoke to the company. It's a company which is essentially based and focused in South Bombay. It might just want to even expand in geographies like, or let's just say areas like Bandra and Greater Bombay for that matter. But the focus pretty much remains intact towards Bombay and Greater Bombay for that matter. It's been a good margin profile for the company. What do you make out of it? Would you give a subscribe to this one?
I think again Suraj is taking all the valuation gap difference between the other companies like Oberoi Real Estate and other companies where they are very highly valued. They are just taking this advantage of valuation game and they are coming out with an IPO. Yes, I think it's a listing gain candidate, not a long-term stock.
Okay, point well taken. Only can subscribe for listing pop, as they may call it. Happy Forgings, another one where it's going to be supplying into global OEMs, 1,000 odd crore of issue out there. Today, we spoke to the management of Happy Forgings as well. They expect normalized revenue growth. CAGR of around 40-42% was clocked in the last 3 years. But the coming next 3 years, they expect the sales growth now to kind of normalize. What is your assessment on this one?
So I think forging as a business is a very normal business, and we can take a growth of 10 to 15% YOY growth. But again, these companies are taking advantage of the market mood and the ample liquidity, and they are coming up with a decent, reasonable valuation. And their comparisons, if you see, Happy Forging is comparing itself with Bharat Forge. I think only the name Forge is taking them to get that valuations. Bharat Forge is almost 85 PE, and this guy is coming out with a 35 PE. So I think the difference they are using this valuation game and coming up with the IPO. Again, for me, Happy Forging would be a good listing gain candidate, but not for the long-term stock.
All right. So long-term stock until now has just turned out to be Muthoot Microfinance, where you're pretty bullish with conviction, subscribe with conviction. Happy Forgings, of course, subscribe for listing pop out there. And Suraj Estate Developers, again, it's going to be a subscribe with listing pop. Also, let's talk about other RBZ Jewelers, Credo Brands Marketing. These are some of the other companies that we have. Have you had the chance to look at them as well?
I think the Motison and RBZ, I have not yet got the chance to look at these things. But Mufti, the company which is going to also come for IPO, that would be a company with very high valuations. I think it is difficult for me to give them a subscribe rating at this point of time.
Okay, so that's a complete avoid in that case. How about, SME IPOs? Have you had the chance even to look at the SME IPOs which will be coming up for subscription?
See, due to my company concerns, we are not taking care of any SME IPOs.
Okay, point well taken. But, of the lot that we're discussing, most of these companies look like it's more of a valuation game. They're just giving a discount to the existing business in the markets and then probably going in to go in public. No specific fundamentally strong conviction oriented stock that we're looking at typically right now, isn't it?
Yes, you are right. See, they are using this market mood, ample liquidity mood. The retails are coming out like anything. They don't want to miss anything out of this. Plus the FIS mood back to India. Global mood is good. If you see India, everything is looking good for India right now. I think for a promoter, this is the right time to grab this opportunity to list themselves and give something on the table so that they get listed easily, and later on the market remains same. With the neutralized growth.
Point is so well taken there, but any other company that you think that perhaps Inox India is one typical company which I perhaps wanted to dwell more on. Inox India saw some great subscription on day one of its bidding. Of course, the issue is gonna close in on Monday, But do you sense some amount of discomfort with the promoter itself acquiring in shares 2 years before at a price of 100 rupees and now bringing an IPO at a price of 650 to 670 per share? How are you looking at it? Do you find that a little lofty? Sure, there is no peer group comparison per se, but do you find that a little bit surprising?
Surprising and concern, right? You're catching the right point in the business, but I think that was been advised for them to do a better corporate restructuring. For an investor point of view, that is a major concern, plus the OFS which they are doing it. For me, I look at as a business model. The promoters had done these things as an advisory part, but yes, if you see global business, if you see India business, yes, the product they are servicing, the manufacturing style, the technology they are using, the certification they need to manufacture, there is a huge demand. I think the gray market is giving them a right valuations right now, but again, a listing gain candidate. Going forward, the growth would be again a 15 to 20% on a top line and a good margin base because there are no competitors. So that would be a great company to invest for a listing gain candidate.
But let's talk about grey market premium of the 5 companies or 8 companies that are going to hit the primary markets in next week. Which of the grey market premium is more demanding? Is it more for Muthoot or is it more for Motison Jewelers, Happy Forgings, Suraj Estate? Which one looks like has got maximum? Go ahead.
Motison Jewelers is taking more juice out of it right now because I think it is coming with a very small micro cap market cap company around 500 600 crores market cap, and plus valuation game, plus the demand for gold jewelries. And I have seen their website and their products; they are really great in terms of designing. So designing would be the major part of the sales going forward. This company can grow 25 to 30% going forward every year. But yes, keeping margin at this level is a big question. But market is giving a great valuation for their market cap because small companies are getting great valuations right now. They have huge growth scope going forward. So in terms of gray, I think Motison's jewelry is getting the first gray advantage. Second, again, I think Happy Forging is also getting good demand in gray. So these 2 companies are commanding a lot for next week.
All right, Prashanth, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you for having me. Yeah.
All right, with this, it's a wrap. Thank you so much for tuning in.